What is up, YouTube? Welcome back to Stocks by the Numbers. We're diving right back into action today because we got to go to work, baby. Today is President's Day. Markets are closed. Obviously, you don't need me to tell you that, but I did want to go over this company because I remember a few people talking about it. Markets are opening tomorrow. Let's see if we should dive in here and take a position potentially, or if this is something that we should just stay the heck away from. Name of the company in question, Biora Therapeutics, ticker symbol BIOR, listed here on the NASDAQ. As we see, company closed $3.22, down a little less than 2% on the day. Now, first thing I notice here is the 52-week range. New lows recently hit after the bull dropped here of $1.95 and a 52-week high of 46.25. Okay, so obviously we have some volatile crap happening here. Now, obviously, when it comes to these small cap, micro cap, I guess, pharmaceutical companies or like healthcare companies, you need to understand going in, this is 100% a speculative roll of the dice. Speculative means it is risky, and obviously, you should really not invest into this company unless it's money that you know not only you have the potential to lose, but more importantly, this is something that is probably going to sell off and bleed potentially for several years before you may start to see some growth and some returns. So just a fair warning going in. If we're not aware of if or how to invest into a situation like this. But getting back into the numbers here, so we have a market cap of about $24.5 million. However, as we see, this is a one-year chart, and if we back this up here to inception of 2020, it looks like mid-2020, basically just a massive sell-off since it went public. And of course, as the ball dropped going into the new year, the company announced a reverse stock split, 1 for 25. We know from the past this is basically a recipe for disaster. Now, you saw the initial pop, which you always see after a reverse stock split, and then, of course, it continued to sell off. Now, it hit the low of $1.95, and that's why, in my opinion, flat out, right here at $3.22, you could probably buy it at $1.22, right? I mean, market cap $24.5 million. And if we come down here for the last several quarters, you can see, basically maintaining or even struggling to maintain 6 figures in income, quarter over quarter. So even if the companies bring in, let's just say $500,000 for the year, $24.5 million market cap, that means they are trading, almost 50 times total revenue to market cap. And of course, the company is losing tens or at least millions of dollars quarter over quarter, basically since 2020. So obviously, we really don't need to look at the financials because, first of all, I looked at this forecast for some other companies in the past, and as we see here, they're really not anticipating much. They're not even forecasting anything for this company, which, kind of raises an eyebrow because I guess it's just so insignificant. I mean, do we not even have analysts making forecast estimates, right? But even if you switch over here, you can see the way this line is rising. And if you look, you can see the liabilities, which is what the company's liable for. You can see the liabilities, look, 193 million, 179, 173, 160, right? So the liabilities are going down. However, look at the assets, 108 million in company assets. Now down to 86, down to 77, down to 62. Right? So on one hand, it's good that they're lowering their liabilities. However, on the other hand, they're also lowering their assets. So as you see, the debt to assets ratio as well, look at this, 178% slowly climbs up to 200%, 2.25%, now sitting at 255% debt to assets. So this company, again, is basically bleeding. Assets are going down, and I can understand the argument, well, they have 62 million in assets, even though they're losing money. They should maintain the market cap of 24 million. On one hand, yes, but of course, on the other hand, no, because the company is barely doing any business. They're bleeding millions of dollars every quarter and every year to stay in business, and on top of which, the company just did a 1 for 25 reverse stock split. So, there's really nothing. Yeah, see, cash from operating activities, you can see it looks like it's trending in the right direction. However, still seriously negative. Cash from investing activities, negative. Again, free cash flow minus 10 million right now. Switching over to the balance sheet again, we looked at the assets and the liabilities, and look at the debt that the company's holding right here. Well over 100 million in debt. And again, the income statement, you're basically seeing minus millions, and occasionally, you'll see a plus, one or 200,000 perhaps. It's just really not looking good on paper, looking at the numbers here for this company. You guys know I like to look at the PEs and whatnot. There is no earnings, so there are no ratios right now. Trading 33 times sales, which is probably a more realistic valuation, as you see, compared to the last couple of quarters. And of course, the profitability ratios, we really don't have to get into it, massively negative. Yeah, that's basically it for the numbers. On the numbers side, in my opinion, again, you may have something here in the short term with the technicals showing you a potential pop, going from 3.25 up to 3.75, and you can make a quick 15%. And, if you personally see the technicals lining up and any patterns, and you, of course, have the assets to risk, then by all means, go for it, make your short-term trades. I wish you the best of luck. Whatever you do with your money is entirely your own prerogative. However, overall, if we're talking about an investment here, this is something that I would definitely stay away from. Again, here at 322, we could probably grab it at 122, potentially even lower. I wanted to show you guys an article that came out here. This is the end of October. The company talks about asset sale agreement to assign certain patent rights related to methods for determining the origin of cell-free DNA to Roche Diagnostics. So first of all, this is why I don't like companies like this, right? Because they're bleeding the whole time. They aren't bringing in any money. You want to keep the company afloat. What do you have to do? You have to start liquidating and selling any IPs that you may have on the back burner, and potentially eliminate them from your long-term pipeline just to keep shareholders happy, or to maintain a listing, or whatever the reasoning might be. However, now that we see this is going to Roche Diagnostics, that may be a company that we can keep an eye on for the next year or two and see if they actually do anything with this. However, in layman's terms here, I don't know much about this sector, but I will say, it just sounds pretty cool, basically. Methods and systems for determining the origin of DNA molecules in a cell-free bodily fluid sample. Applications describe the use of technology to determine fetal fraction, to detect the presence of cancer, to detect transplant rejection, to monitor organ failure or tissue necrosis, and to diagnose heart disease. So, it sounds pretty cool, and it sounds like apparently it's used to determine a slew of crap. So, this is what I'm saying. Like, me personally, if I was running the company, I don't know if I would have agreed to that sale to Roche. However, this is what I mean. It's like you got to do what you got to do. But I'll put the link to the article in the description, and this one as well, going back to a little after the ball dropped here, January 9th, and they talk about the FDA, and it says here, the recent Type C response from the FDA further strengthens our confidence in our plans to enter the clinic during the first half of 2023, okay, with IND filing followed by trial initiation in Q2 and data readouts anticipated in Q3, okay? So you have a company that is basically bleeding in value and stock price for the last 2 years, 2.5 years, whatever it may be. You have a company that just announced a reverse stock split. You have a company that, on paper, in my opinion, is overvalued, looking at the numbers. And more importantly, here, if trial initiation begins around Q2, which is soon, but data readouts are anticipated in Q3, then basically what you're telling me is I have at least a few months before I would potentially, if I wanted to, have to force my way and accumulate some shares here and tuck them away. So, again, long-term bleeding, reverse stock split, and apparently you have time with this overvalued stock before you even may want to position yourself. Yeah, at least 4 or 5 months, in my opinion, I would wait. That's why, again, in my opinion, 322 here, coming off this split when, it was at minimum 33% less, at least, than where it is now, with the potential to go lower here, looking at the fib here of about 1.5. Yeah, in my opinion, I would not be involved or even looking to get involved with this company here in the near future, I would say. Long term, I mean, who knows? Right? They could be the next Pfizer. Maybe the data comes out and it's absolutely positive and it's phenomenal. Everyone starts talking about them again, jumping on board, wanting shares, right? But again, that's best case scenario for companies like this, because if they say, even when the data comes out, that, oh, everything's going according to plan and, they're going to keep chugging along, it's like that's still not good enough news to basically prop up the price of the stock, in my opinion. So it's just going to keep on bleeding. We're looking at the daily here on stock charts, and the one indicator we could use here is potentially the RSI. As you see, sub 40 approaching that benchmark of 30, which again means a lot of swing traders will use that metric to indicate that the stock is oversold. So they will then start accumulating shares sub 30 and just wait for that pop. However, again, history shows us over the last several months, the company had an RSI down at 18 again. This is looking like about 20, 21 and a half. So, the RSI approaching 30, in my opinion, really isn't an indicator of anything. And as you can see here, even after the news of the reverse split, yes, the stock jumped up and it was fighting for a couple of weeks to maintain that moving average and stay above the mid-Bollinger Band. But again, recently, going into February, it broke the mid-Bollinger Band, instantly got down to the bottom Bollinger Band and has basically been hugging that line, slowly selling off. Again, MACD slightly pulling back. So I'm really not seeing anything really of value here. Again, the RSI on the weekly, 32, even closer to that 30. However, we can see just recently, right after the bull dropped around the time of the reverse stock split, the RSI was well sub 30 and, wasn't forced to make a move here going back to the end of 2020. You can see the RSI at about 20 or about 19 and change. So this RSI approaching this benchmark really doesn't help us at all. You could say the MACD, maybe it looks like it's curling. I don't know. But, either way, it really shouldn't matter because, again, this stock should sell off 60-70%, in my opinion, at least in the short term from where it's currently trading. Now, if you get involved and it happens to start running up in value, congratulations. I wish you the best of luck. I know times are rough, so if you bought it, you made money, awesome. I'm glad I was wrong for you, right? But overall, the gist of what I'm telling you guys here, this is something that is not looking good in the charts. It's not looking good in the numbers or on paper. And again, no urgency. So, maybe we can do an update video in like July or August, going into that Q3 in anticipation of that data. But as of right now, I'm just not seeing it. So I'll leave it there. But once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, please drop them down in the comments section. I'm usually very quick to reply. Just like everyone on YouTube says, if you like the video, do me a favor, thumbs up, right? Like the video. I actually hate saying it on every video. However, as we know, that's the way the algorithm works, right? So the only way to, help out more people and get an even more engrossed discussion going, whether it's in the Discord or in the comment section, is unfortunately to take a second and push the like button and get more eyes here on the channel. But I really don't care. But on the flip side also, if you appreciate the content I'm putting out, if you feel that a few of my videos have helped you out, or, I made a good call for you, I helped you save money or potentially make money, just do me a favor, push the subscribe button. Obviously, personally, means a lot to me watching the community grow. Again, I have my personal Discord in the description if you guys want to come in, you want to BS for a little bit, or, you just want to be here just in case we start talking about something, that's fine. But like I always say, moving forward, I understand that markets are rocky and they're volatile and they're uncertain, right? This is a new year. We have to stay positive, we have to stay focused, and we have to stay disciplined, okay? So I wish all of you well. I hope everyone makes a couple of dollars. I want to thank you for stopping by, and I'll see you guys soon in the next video. Take care.